Venkat, let me start off with you though. Yeah, the rise of Edelweiss along with the rise of BSE, because you guys have been in the markets, you and Rashesh, you know, we got some images of how in your younger days, you guys are young even now, but even when you were even younger, and how you started off from there and how it was being in the ring, you know, exchanging share certificates as opposed to it just being an electronic thing. How were those days different?
Well, Edelweiss is in that sense much younger than Bombay Stock Exchange.
Of course.
And from the beginning of Edelweiss, SEBI had already come about.
Okay, fine.
Right? So most of our journey has been in the as part of the new part of India,
right,
which is post-regularization, post NSE, post BSE being electronic, and SEBI being there.
Yeah, but you guys have been here. You guys have done that,
yes,
right? I mean, if it not be as a formal part of Edelweiss, it probably is in the way you were in the markets. I mean, you've done all of that. You've been at this historic place, and I'm sure the thrill of trading was quite different from what it is right now.
In fact, I would say that we have straddled the old Indian capital markets and the new Indian capital markets.
Right.
We started off in the old one because we started around 95. And I would say the new Indian capital market, which, you know, online trading and dematerialized share certificates and F&O, all of that is post 2001-2. So I think the first phase was in the old capital markets and the second phase was the new capital markets. Right. So in a way we experienced both, and I saw capital markets change completely.
Right.
So if you saw capital markets in India after 2000, I think it's a very different world than it was before 2000. So I think that was a very big change.
Is this a better world, Rashesh?
100% better. I think a lot better, with more volumes, more transparency, much better for investors. And we have had actually no scams.
Yes.
Secondary market infrastructure in India is one of the best now, and not just equities, currencies, interest rate futures, all of them we have with a T+2 settlement. Even in the credit crisis when other markets were closed for a few days, the Indian market was open all through.
So, Venkat, before we talk about the markets at large, I also want to talk about Edelweiss, you know, because you guys have grown as an institution quite well. Now you're no longer just brokers. For a while now, you do no longer been brokers. You are a lot more than a brokerage, right? Because you're deriving a lot of your revenues from other businesses as well. What would your message be, so to say, to an average shareholder of Edelweiss? I'm not getting into an EPS and profit and all of that. But do you think that the growth in the financial markets would reflect in the way Edelweiss grows here on for the next 4 or 5 years, or maybe 10 years?
I definitely think that the best is yet to come.
Great.
See, Edelweiss, in its journey towards becoming a diversified financial services company, has started quite a few businesses who are in their own respect still in their infancy. So the runway that each of these businesses have is so significant that we do believe that if India as a country does well, financial services as an industry will do well.
And Edelweiss as a stock could do well as well. You believe earnings growth out there has the potential to be very strong? Because a lot of people in the market, your peers who track your stock, say that about Edelweiss.
Definitely.
Okay, great. Rashesh, what about the markets at large though? I mean, the last few days we've been bogged down by some global fears. It's a fear of the unknown, right? Because frankly, not too many people know what exactly will be the eventual outcome from China and what kind of impact that is had. A lot of people are now talking about there being a possibility of a QE from China, and that probably being positive for equity markets in the peripheral region and in the Asian region as well. How are you gauging the market mood right now?
I think exactly as you said, you know, there was something that always has to worry the market. So, and China is a big one. According to me, China is not like a Greece or a Cyprus related issue because they are much smaller markets.
Yes.
China is now the second largest economy in the world. So it has impact, and I think if there is turbulence out there, it will affect, you know, I think every part of the world.
And, so there is a bit of turbulence
and
there.
China is also India's largest trading partner.
Yes.
So when their currency falls, it will affect our foreign trade also. So there are implications for that, but to counterbalance that, Indian macroeconomic situation is very robust right now. You know, the forex reserves we have, even the rupee has been reasonably stable as compared to other emerging markets. If you see our inflation is inching down, interest rates are coming down, government fiscal deficit is under control. So I have not seen such robust macroeconomic environment for India. And as long as oil price remains low, I think, we will still remain very strong. To counter that with this global turbulence that is going on, I think in the whole, it will balance it out. And one of the most important things that we are not realizing is the financialization of Indian household savings has started again. The amount of flows we are seeing coming into mutual funds and now hopefully into insurance that will start is going to be phenomenal, and I think that will change the entire balance of the markets.
So in a nutshell, do you guys reckon that this is a buy on dips market?
It is definitely a buy on dips, but buy carefully, not chase the market. Don't go after any and every stock. I think you should buy on dips, but good quality stocks, good stable companies. Because I think in India, good companies can grow their earnings by 15 to 18% fairly easily for the next 8-10 years. And if they grow their earnings by 15 to 18%, the stock price will do the same, because the P multiple on the long term, there is a 100% correlation between growth in earnings and growth in stock price. So on that basis, I think if you buy good companies at reasonable price on the dips and all, I think it will be a great opportunity for investors.
Venkat, we had the finance minister talk to us today exclusively at about 10:30, and since then we've been playing out whatever he's been saying. Amongst other things, he sounded very confident of India being able to shoulder the global growth by virtue of how India as an economy will grow for the next 5 years. Now my question is, assuming that that does happen, yes, for the next 5 years, what spaces within the market? I mean, you heard the FM, you heard the RBI, you yourself analyzed all the sectors very, very closely. Where do you think maximum bang for the buck could come in? Because the opinion is divided right out there. Some people say rupee devaluing, so look at the export-oriented sectors, the earnings will be stable there. A lot of people saying that if you believe in the India story, then buy the India macros and in India cyclicals, because those will do well over the next 5 years. Where do you find favor?
At least in my view, it is a mix of both.
That's the easy answer, Venkat.
So you should do.
That's the easy answer.
Well, I do believe that India will do well.
Okay.
And if the hypothesis is that India will shoulder some of that growth, you should buy financial services, you should buy infra. I think there is for India to do well over the next 5-7 years, I think India infra has to do well.
Right.
And I'm not necessarily there with the commodity stock yet, but I think financial services, infrastructure, consumer.
Okay, all of these look set for a good long-term innings. Yeah, great. Rashesh, the other thing is, what's the caveat? I mean, so when you were in your as I keep on referring to that term, in your younger days, you are young, but when you were younger and you were trading out here, maybe in this ring, I do not know that, but assuming that you were, there was always this fear, as you said, that there were scams, a lot of them then. They are not so much now because it's a more regulated, more disciplined market. It's a very transparent market. So that fear is not there. What is the fear for this market, if at all?
From market infrastructure point of view,
no,
or just overall?
generally. So if there is a scam, I'm sure it has a disruption on the market.
No, I think scams and all are now.
So that's gone.
I think even that time what happened is there was lack of transparency.
Right.
The paper-based trading put in so much inefficiency that people could manipulate stocks and all.
Agreed.
All that is gone away because I think there is so transparency, so much spreads are lower, all of that is there. So we have got that out of the way.
So that's out of the way. So what is the fear for the market? Is it a global fear lurking somewhere? Is it reforms not going through because land bill now will be not be passed through, it's being let go? What is the fear for the market?
I think the largest fear in the market is always expectations, I feel, because I think markets usually, they build huge expectations and then they get completely disappointed. And I think that would be the risk of, this from time to time. Because I think India will be incremental, slow growth, and this government is very clear. They are not going to be big bang reforms, but there is going to be continuous, slow, one step at a time kind of growth. So I think that is going to be one. And the second fear I would have is the global volatility will shake out a lot of people. I think what happened last week, a week ago, can shake out a lot of even good long-term investors in India. So we will always be vulnerable to the global volatility because we are not insulated from there. And I think investors should try and shrug it off and use that to their advantage if they can, but at least not get shaken out because of that.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at ET Now Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ET Now.